When you're a small business owner, you need access to the tools and support you never knew you needed. At the Dream Center, we offer co-working space and support services that elevate the everyday entrepreneur. Centrally located in the rising Soul City corridor of Chicago, we're the ideal environment, offering monthly and quarterly networking for members. Bring your idea to fruition. Expand to new heights. Call now or visit thedreamcenter.co today.
Oh, good evening. Good evening. Welcome to the Dream Center Dreaming Out Loud podcast webinar series. My name is Marcel Action Jackson. I am the CEO of the Dream Center. I am actually working remotely, not from my office, as you can see, but from one of my favorite clients' office. Um, I couldn't get back to the office in time and I didn't want to be late for this webinar. Of course, for those of you who don't know, I am also the host of the Brunch Bunch on Inspiration 1390, and we host a daily show from 12 to 1. And we talked about this afternoon that my son, MJ, my namesake Marcel Jr., had a procedure today. So it's been a long, long day, but I am so excited. Great things are happening in the entrepreneurial world. Okay, sorry about that. Technical difficulties. People always want to call. I've only been broadcasting, sending emails out, and posting on social media that we are live at 6 o'clock. But I won't take up too much of the time. We have some great speakers. So if you don't know, the Dream Center Co-working and Business Support Services, we help aspiring entrepreneurs and entrepreneurs either start or grow their business. We offer co-working spaces, business support services, virtual offices. We have a podcast studio and conference room, and we're located in the Soul City corridor on the great west side of Chicago. And so our first Dreaming Out Loud webinar series, we had attorney India Rios talking about the importance of trademarking and your legal structure in your business. One of the things I've learned as an entrepreneur, small business owners need two things that we most times can't afford in the beginning, and that's a lawyer and an accountant, right? And so we want to make sure that we're bringing you tools and resources that will help you to either start or grow your business. Bear with me. I'm getting text messages and people are coming on, so I want to give everyone an opportunity. Tonight we're talking finance, right? So one of the things that I've learned, we all talk about we want six figures. I want to hit six figures, and that's a good thing to want, right? But we need to change our conversation to we want to net six figures and net seven figures, because your bottom line, your gross can show that you made 100, 200, $300,000, but then you only have $5 in your bank account. It really didn't do you any real justice, right? So what we want to learn how to do as entrepreneurs is learn how to start keeping money in our pockets. And one of the things I often share, and I guess I'm sharing with the World Wide Web now, but one of the things when my company first hit seven figures, it one was a surprise and a shocker to me because I didn't have the proper tools in place to even realize that we had made that much money. But then I cried a little because I'm like, where's the money at? We made a lot of money, but where's the money in my pocket? But nevertheless, all of the things that we've learned and we've been through now, we're bringing it to you. And so tonight, we have a great power couple, a duo that own their own business. And I want to give them a proper introduction. But of course, technology is not on my side. But I can talk about their character. I can talk about their business acumen. There's none other than Stephen and Essence Keys, the owners of Expedient Tax. I hope I'm saying that right. I'm looking at them backstage. They're giving me the nod, yes, and thumbs up. They're passionate about helping the community understand their finances. They do tax accounting, they do bookkeeping services for small businesses. They're dedicated and commitment to educating. And one of the things we were looking for when we were looking for partners to help and come to speak to our audience was people that have a heart for people. I have a heart for people. The staff at the Dream Center, we have a heart for people, and we're really community driven, and we're not profit driven. And so we wanted to bring some other people who were looking past the profits and looking at people. Now, if I was a preacher or something, I'd say, turn to your neighbor and say, look past the profit and look at people. But listen, without further ado, I want to welcome to the Dreaming Out Loud. So just so you know, I'm at Key Organics, which is actually my mother's company, and I'm in her office. And so if you can only imagine, there are all types of bowls and pots and oils. She makes all, shameless plug. If you're looking for all natural lotion, check out Key, that's KEI Organic. So I knocked over some bowls when you just heard that. But without further ado, I want to welcome to tonight's Dreaming Out Loud podcast webinar series, Stephen and Essence Keys. Woo, 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 woo.
I'm gonna try to get on the screen.
Okay, can you see? All right, awesome.
Hey, how you guys doing this evening?
Oh, we are doing wonderful. Marcel, thank you so much for the introduction. Thanks for having us on the show as well. And to all the listeners that's out there, you guys are in for a treat tonight.
Yes.
What'd you say,
Yes, it is Stephen with the N. I'm sorry I didn't have the N, but we know who he is.
I was oh, is that his nickname? But look, I'm looking a little rough, but the show must go on. I am excited. Hope y'all like my new glasses.
I'm feeling it.
These are some smart glasses, so I am actually getting footage of the workshop for social media, the things we'll do for content, right? But nevertheless, Stephen and Esther, I'm excited to have you. As I aforementioned in the intro, so many times, and I know you guys can attest to this, so many times we're seeing six-figure earners, six-figure gross earners, but we're not seeing six-figure net earners as much as we should be. And so I know tonight you're going to be teaching us some things on how to, manage our finances and how to keep some of that money in our pocket. And so, not believers, dream builders. I got to remember, I'm not on 1390 right now.
We are believers.
Yes.
Believers. Come on.
We got dream builders here, and so we're all building dreams. I hope you get your pens and your pads and take notes. What we're going to do, Stephen and Essence going to do their presentation. They're going to teach. And then if you have any questions, comment in the comment box. Shout out to one of my greatest assistants who's been rocking with me forever, Bloom, who is backstage managing.
All right.
The comments, questions are on the screen. So you don't have to save them to you hear something good. Make sure you comment. What's up, J Skull, DJ Bilo, the Bunch is tuned in. Hey, everybody. So listen, without further ado, let's take it away. Let's
go.
All right, awesome. Okay, guys. Yes, once again, thank you so much, Marcel, for having us again today. And I gotta thank the lovely wife, also the founder and VP, who's also here too as well. Yes, so we're gonna make this really cool, really fun, most likely conversational. And Expedient Tax, we have been open. Yes, we're open year round. Yes, all year round. That's what makes us sets us apart. Okay, so what we want to do is pretty much just go over, we're going to shed a little bit of knowledge.
Hey.
And we're going to talk about the evolution of taxation. You know, a lot of people talk about taxes, essence, and I think a lot of people just don't understand. Could you imagine the evolution of taxes from 1794?
Wow.
Now, this is a timeline, guys, if y'all check it out with me.
I just fell asleep. But he makes it fun. So.
Okay, so the goal of the reason why we have this first is I like everybody to have a little bit of knowledge, and this is what we teach. And in order to understand taxation, we feel it might be helpful to understand how and why taxation began in the United States. Now, check this out, Essence. Many taxpayers wonder how taxation began, right? Mm-hmm. But most think taxation began in the 20th century, while others think that the ideal of taxation is as old as the world. Can you believe that? Man, yes. So the truth is, taxation became a way of life in the United States, right? After the Revolutionary War, okay? And the United States was faced with a tremendous war debt and needed to create an economic stability to prosperity, right? Mm-hmm. And as a mean of funding the financial issues, okay, Congress then placed an excise tax on the sale of whiskey. Because look, 1794, whiskey was a big thing back then, okay? Now, farmers in Western Pennsylvania felt that their livelihoods was threatened by the tax, and many refused to pay it. As a protest to the tax, the farmers took part in the 1974 Whiskey Rebellion. Okay. Now, when you guys can fact check it, you can definitely Google it. Okay. So remember, it was the 1794 Whiskey Rebellion. Okay. And President George Washington sent militias into Western Pennsylvania, and the rebellion was defeated. Okay. Now, the Whiskey Rebellion was the first test that the government constitutional power to tax. So some of them criticized Washington for sending troops to face American citizens, yet his actions enforced the federal government's authority, right? And Washington made the point that the Constitution is the law of the land and must be obeyed. So this is now look, all these things happening. Now this is 1794, guys, right? So over the years that followed the Whiskey Rebellion, they had tariffs and taxes was placed on various goods, right, and services. The taxes were used primarily to promote revenue for war, right, and national crisis. Okay, but in 1862, just to fast forward, right, 1862, right, guess what happened? In 1862, it says the first federal income tax resulted from the Revenue Act of 1962. The first commissioner of Internal Revenue and the Bureau of Internal Revenue was established in 1862. Okay, so that's where we get all of that from, right? Now, the federal income tax resulted from the Revenue Act of 1862, and it was repealed 10 years later. Okay, now this is the timeline, guys, right? So 10 years later, it was repealed, okay? In 1872. So now we're in 1872, the federal income tax was eliminated. So what happened was the Supreme Court declared that the Revenue Act of 62 was unconstitutional in 1895, okay? So the federal income tax was later reinstated in 1913 under the 16th Amendment. Could you imagine that, y'all? So we fast forward, look at that. The first form, 1040, was released consisting of 4 pages. So what I'm gonna do, I want to show y'all, this is the first form, right? In 1913, okay?
That's when they did it by hand.
Yeah, exactly. Everything was done by hand. You had to, all the numbers, everything was by paper. Could you imagine that, doing everything, all of those forms by hand, right?
Yeah.
So now, right, it's a lot. So what we want to go over, make sure you guys have your pens and your pads, some key terms that everybody needs to know. We always get this question that comes up. Number one is adjusted gross income. Okay, that's AGI. Everybody always say, "Oh my God, what's my AGI?"
What's my AGI?
Right?
Yeah.
And then adjustments to income. We're going to be talking about dependent. What a dependent is.
We have dependents. We have 2 boys, 4. Jeremiah is 4, and Stephen is 7. So
okay,
dependents.
Okay. We're going to be talking about filing statuses, right? Gross income. Okay, non-resident alien, resident alien, and taxable income. Okay, so those are some of the key terms that I want everybody to write down. Okay, now as you can see, this form, this 1040. So from 1913 versus the 1040, the 2023 1040. Right now, the filing statuses. There are 5 filing statuses. You have single, you have married filing jointly, you have married filing separately, you have head of household, and you also have qualifying survivor spouse, okay? Now, single, the taxpayer can use the single filing status if on December 31st, they are considered unmarried or are legally separated by divorce or separated maintenance decree, and do not qualify for another filing status. All right. Now, married filing jointly. Married filing jointly is more so a status that comes with the benefit of marriage. A lot of people may not file married filing jointly, even though they're in a marriage. Essence, you know why? Because somebody, maybe one of the spouses may owe debts.
Yes.
But see, yes, but the problem with that is you're not reaping the benefits of what it is to be married.
Yeah, we've had like clients that will say, well, we're just going to file married filing separately. And we're like, no, there's no benefit.
And we're gonna get to that. We're gonna get to that. But yes, this married filing jointly. Yes, thanks, Essence. That was a good point. Yep, we're gonna get to that. So the taxpayer can use married filing jointly status if on December 31st, right? Now, what that means is if you got married, let's say later on in the year, as long as it was before December 31st, you can be considered to have been married for the entire year. That's how
so if you get married on December 30th.
Yes, then you've been married the entire tax year. Absolutely.
Wow.
Now, the taxpayer and their spouses are married and choose to file jointly if they had no income or deductions. Okay, so let's go to this married filing separately. So we ask clients to stay away from married filing separately. You know why, Essence?
No benefits.
No benefits whatsoever. Married filing separately is more like a punishment, right? Mm-hmm. And we're gonna go down the list and see what is the rules for married filing separately. Let's see. They must itemize if their spouse itemized. They cannot deduct student loan interest. They do not qualify for earned income tax credit. They can't take credit for a child or dependent care expenses in most instances, right? The amount that can be excluded from income under an employer's dependent care assistance program is limited to $2,500 instead of $5,000 if filing jointly. Could you imagine that? And then they cannot take credit for the elderly or disabled unless the taxpayer and spouse lived apart for the entire year. They cannot take education credits or deductions for student loan interest. They can't take the adoption credit. The amount allowed for the child tax credit and retirement savings contribution credit are reduced. and they may be required to include more Social Security or railroad retirement. Ain't that something? And taxable income. Wow. Look at all of this. So why in the world would I file married filing separate? It's a punishment.
Yeah. So
some people think because, I don't live with just because I don't want to file with my spouse, I got to use this file.
Or you're filing with one preparer and I'm filing with a different one, and so my preparer said file separate. No punishments. Yes. No benefits.
No benefits. Okay, so that's one of the things that we recommend all clients, taxpayers, to stay away from. Okay, now married filing separately can be used on December 31st as well, right? Now, if you choose to do it, you got to be living apart for at least 6 months of the year, okay? But it is not recommended to file that. Now, 2023 exemptions. Exemptions were allowed on the tax return before 2018 for each person, all right? But guess what? They eliminated exemptions, personal exemptions in 2018, okay? The exemption amount has been adjusted to $4,700 to keep up with inflation, as there are areas of the tax code where the exemption amount is used to determine eligibility for other items. So 2018 tax was one of the worst tax years in the world. That was when the 1040 was only one form, and they just eliminated everything, which was so
the exemptions crazy. They're a benefit to our clients, correct?
Absolutely. Well, since they changed it from 2018, the way that exemptions are looked at is so different. It's not the same. Remember when people, they would come to us with W-4s, and then you could just write, I got 4 exemptions if I want them to take less taxes out, or or they take out more. It changed. All of that is eliminated. That's obsolete. Okay. Now, Tax Cuts and Jobs Act of 2017. So signed into law on December 22nd, 2017 by former President Trump. Many legislative changes are temporary and still in effect from 2018 to 2025, okay? Most changes introduced by the bill went into effect January 1st, 2018, and it did not affect 2017 taxes, okay? Now, the TCJA was one of the most sweeping change up to the code in over 30 years. Could you imagine this, man? So TCJA reduced income tax rates for most individual tax brackets and significantly reduced the income tax rate for corporations. Okay, so this is all happening. This is and what else did it do? It eliminated exemptions, doubled the child tax credit though from $1,000 to $2,000, with $1,400 of that credit being refundable. So you have 2 types of credits: refundable credits and non-refundable credits, right? Mm-hmm. So the TCJA changed deductions, depreciation, expensing tax credits, and other tax items that affect businesses. Okay, we're about to get right into some stuff, guys. Okay, so now they introduced this new form, Schedule 1. So additional income and adjustments to income. So Schedule 1 is required if the taxpayer has additional income such as taxable refunds, alimony received, capital gains, ordinary gains, rental real estate, royalties, unemployment compensation. Self-employed persons who report their earnings on a Schedule C, which is the profit and loss from the business, and any other income that does not fit the above categories should be reported as other income. Okay, so this is how that form looks. That's Schedule 1, guys. So if you out there, they should be able to see it. So if you guys are doing your return, these are additional forms that have to be added to that 1040. Okay.
Yes, because some of our clients will say, "Oh my goodness, I am missing a form," and then it changes the whole return. So it is important to have everything. Like what we tell our clients is to have an organization system,
yes,
so that at the end of the year, when you are about to at the beginning of the year, when you're about to file with us, you already have everything saved. And we like to use digital, we have our phones, so just save it in the app. They have different apps where you can store your documents. And when you file with us, we have something called a portal where you can upload your documents. So you can actually pull up your documents without having to worry about, oh my goodness, I have to save this. No, it saves for you. And also, we're all about your convenience. Yes. So we're able to send you the copy of your return throughout the year if you need it for housing or anything like that. I'm sorry, you guys. 4 and 7-year-old calling. I'll step away for 1 second. Keep
no
going.
problem, Mrs. Keys. So that's Schedule 1. Thank you for that. That Schedule 1 also covers deductions such as IRA deductions, penalties for early withdrawal and savings, healthcare savings account deductions, moving expenses for members of the armed forces, student loan deductions, alimonies paid before 2019, IRA deductions, educator expenses, expenses for reservists, performing artists, fee-based government officials, retired plans established by businesses, also health insurance premiums too as well. So all of this on Schedule 1, this is where you will report a lot of those items. So you see this Schedule 3, this is another form that covers, this is the non-refundable credit form. Okay, so what that non-refundable credit does is it reduces, it doesn't give you a credit, but it gives you a deduction that reduces the tax liability that you owe. Okay, so this is that form, and you see part 1 that says non-refundable credits. Okay.
Yes.
Also, this is a new form that was used in 2023. It actually came out this year. It's called the 1040 SR. Now, this form is for seniors, right? Mm-hmm. So you see that 1040 SR at the top. A lot of the seniors, and we're going to go into understanding that form. So filers must be at least 65 by the end of the year. If married, filing jointly, or both spouses must be age 65 to use this form. And what does this form do? It says includes a larger fund out of respect for the aging eyes of those taxpayers that are 65 and older. Okay, so if you guys, if you have parents or you have uncles and aunts that want to save money instead of just doing a regular 1040, now they're able to use the 1040 SR, which is specifically for them. So taxpayers who use Form 1040 SR must use the standard deduction, and taxpayers who itemize cannot use Form 1040 SR. Most likely, anybody over 65 may not be itemizing, because they get all of the benefits after 65. Yeah. I mean, even mortgages are like, there's no interest. They don't pay property tax, right? I think they get that senior discount, right? But yes, like veterans. Now we do have a question for you that we want to see who's been paying attention. So only seniors may use which of the following forms to file their taxes in 2023? Is it A, Form 1040A? Is it B, Form 1040EZ? Is it C, 1040SR? Or is it D, Form 1040? Yeah, definitely. You can type your answers in the chat. Okay. Yes. Now, the thing about taxes is when you have a business, there are different types of accounting methods. And I feel like this is very important that clients, everybody needs to know this. Okay. Okay. I see. Hadia. C, that is correct. Yes. Okay. 1040 SR, Kathleen. Good job. Yes. Leticia. Yes. 1040 SR. That's right. Come on, y'all. All right. So I see everybody been paying attention. Okay. All right. I love it. Now, remember, guys, okay, if you have a business, the accounting periods and methods. So the accounting periods are calendar year, which is the 12 months from January 1st to December 31st. You also have the fiscal year, which is a 12-month period that ends on the last day of any month except December. So this is when the books close, when you want to close your books out for the year, and you don't want to wait until December 31st. Your business may close out their books in August, right? Or October, right? Now, the accounting methods, you guys want to write this down. Accounting methods are the cash method. So the cash method is all income is reported in the year constructively received, okay? And expenses are deducted in the year they are paid. Now, you also have the accrual method, which is all income is reported when earned or received. Expenses are deducted when incurred rather than paid, okay? Yes. Now, who uses the accrual method? I believe most restaurants use it because they have inventory. And the only way that you can change your accounting methods, you have to notify the IRS. Okay. All right. Let me see. Okay. So let's do another question. One more. Kenny explains accounting methods to all his new business clients. Okay. All the following statements are correct, except A, a taxpayer can use different accounting method for each business owned. Is it B, if a taxpayer claims income that is constructively received, they are using the accrual method of accounting? Or is it C, as a rule, a taxpayer can only change accounting method with IRS permission? Or is it D, the accrual method of accounting is used when a business has inventory? Now, remember the question. Kenny explains accounting methods to all his new clients, right? Now, all the following statements are correct, except. So I want to hear your answers out there. Okay? Is it A, B, C, or D? Okay, guys, take a shot at it. All right, definitely. Yeah, we'll come back to that. Type it in the chat. Type it in the chat for us. Okay, now, cost of maintaining a household. So costs to maintain a household include upkeep expenses such as rent, mortgage, interest payments, real estate taxes, insurance on home repairs, utilities and foods eaten in the home, right? It does not include education, clothing, medical treatment, vacations, life insurance, or transportation. Okay, that's what's not considered maintaining the household.
And I know that this kind of made me think about when we have some clients that work from home. Like a work from home business is a great way to kind of have additional income because you can actually write off your rent. A lot of people don't know that. So if you claim a square footage in the home where you're working, you can write that off. So it's like, get a home business. We actually have an Expedient Tax Institute where we teach people, individuals like you, business owners, or just a regular person that just wants to learn about taxes, how to do them. And you will find that having a business is to your benefit. There are things that we go into later, but that just sparked something that I found interesting, where a lot of our clients ask, okay, how can I make money on my rent? Or
can I write off my rent? Absolutely. If you have a home business, you paying rent, you live in that apartment, guess what? A percentage of that is a deduction. Okay, so you can write off your rent. Now, how that works though, it goes by the square footage of the whole entire apartment or home. And then it goes by a percentage of what do you use as office space. So you guys might want to write that down. So if you anybody that have their preparers that they go to, say, hey, make sure that I'm getting this rent covered, because if you have side businesses that you do from your house.
Expedient Tax, right? Another thing is, if you have a business, you can actually put your company name in your phone. If you have a cell phone, I will put that in my company name, and you can write that off as well.
So Essence, you saving some people some money now. You saving some money.
Yeah, we like to help our clients win in every way possible, because the economy, as we know, is it's going up. And so what we want to do is not only do your taxes, but educate you and make it fun too. Like a lot of our clients tell us some of the things they learn from us, and they're able to share it with their friends and their family. And that helps us because we're all about, being a beacon of hope for the community, and educating and providing financial literacy amongst our community is very important to us.
Yes. And you know what, Essence, I believe this is the year of the entrepreneur.
Yes.
And being an entrepreneur, guys, what that means is you have two types of assets. You have your personal assets and you have your business asset.
Mm-hmm.
So just like Essence was saying, what's really going to save you some money too as well, put that phone in your business name. When you lease a car or you finance a car, finance it in your business name. Yes. Okay, because that's where the benefits come from. There's no personal benefits, like a personal asset, on the other hand, is more like jewelry, yes. Like a wedding ring. I think my wife have one that, oh my gosh, yeah, I'm gonna have to,
Yes.
But yeah,
and,
that's that personal
the
asset.
Sales tax for that car, like when you get a new car, a lot of people forget that. Like we're like, do you have your sales tax for that vehicle that you bought? That's another thing that can help minimize your deductions on your tax, maximize your deductions.
Mm-hmm. And the name of that form, that sales tax form, is called ST556.
Okay.
So
yes.
Give that to your preparer at the end of the year, and then you can write off that sales tax on the car.
It's very important.
Okay, it's very important. Now, business income. A sole proprietor is an individual business owner of a business or self-employed individual. Taxable income is determined on this Schedule C. So the way that we look at taxes, because we're tax accountants, is we look at the whole picture of what that business generates. Right. So a business owner may also be required to pay self-employment tax. So if you're a sole proprietor, even if you're an LLC, guess what, guys? You're still being taxed as a sole proprietor because you are considered a disregarded entity. Right. Okay. Mm-hmm. So the net profit or loss is reported on that Schedule C. Now, it's transferred also to Schedule 1. Now, a business owner may also be required to pay self-employment tax, the Social Security and Medicare tax equivalent reported on that Schedule SE. Now, for my business owner, this is another way to save money. So if you don't want to
write this down. This is a nugget.
Yes. If you don't want to pay taxes from the business at the end of the year, you don't have to. You could do what is called estimated tax payments or quarterly tax payments. You can send in the profits that the profits that you make from the business, however your business generate, whether it's monthly, quarterly. You could take 10% of that, 10 to 11%, just go over just a little bit, and then you can send those payments in. Okay, and that's how you keep up with your taxes that you won't end up on at the end of the year. Because see, what if that person wanted to get a house? Right. You can't write off everything. No. You're gonna have to pay some type of form of tax because you want to show that you don't have too much of a loss. Okay. Yes. So because business, they need to see income.
Now, right? What if I wanted to? A lot of I'm just trying to think of questions that people have asked us. They said, "Well, I just started my business. How about I start it? Put it in the LLC." We don't recommend you do that right away because, once you establish that business, those expenses come in. And what's that rule? Whether you want to decide if you're a corporation, you want to file as a LLC or a C Corp, or how does that go?
Okay, so, basically, what Essence is trying to say is that starting off, if your business is not profitable, there's a certain time that you may not want to incorporate right away. Because what happens is you have to pay that annual fee for your, and if you're late, they charge you $250 penalty for not for not updating it on time, right?
Depending on your state.
Depending on your state that you're in, absolutely. But we know, yes, in Illinois, it's $250.
We do file for all 50 states, by the way. So wherever you are in the world, we can file your taxes or just give you some information on finance that you may need.
Absolutely. So, and also remember, you having these forms are very important. So for anybody out there who also have a state and trust income and is reported on a form 1041, however, the income is passed through to heirs and beneficiaries through Schedule K1, right? So this is where you will file it on Schedule K1, 1041. After the death of a taxpayer, an estate is usually formed, which contains assets and the taxpayer owned at the time of their death. A trust is an entity that contains and distributes assets based on the directions included in the trust and document created when the trust was formed. Beneficiaries receive income from the trust as directed by the trust document. So remember, we need all of those documents. So make sure you guys, when you're filing your taxes, you have your K1s, and when you do your self-employment taxes too, don't just go in there and have you expect the tax accountants to make up some numbers. Have your stuff in order.
Yes.
Look, show us your income, what you actually made, and also show the expenses throughout the year, okay, of what you had to do, because you may miss out on something. So now what we do is help you along the way,
yeah.
But you got to give us some wiggle room to work with you.
And another thing is, that just reminded me, we offer notary services as well. So we just helped someone with who needed a notary for a trust. So that's another service that we offer as well. Yes,
we make sure we try to cover all bases at Expedient. Now, partnerships and the S Corp income. Okay, guys, income that a taxpayer receives from a partnership or S corporation is taxable. In most cases, neither partnerships nor S corporations pay taxes at the entity level. Instead, the taxes are passed through to the partners or shareholders who report the income as well as some of the expenses, deductions, and credits on their individual tax returns. Now, taxpayers should receive what is called a Schedule K1 from the partnership or S corporation, which shows income and expenses taxpayers should report on their individual returns. Now, this is another side note that I want to throw in too. So if you are an LLC and you make money from your business, and let's say you're not on someone's payroll, right? Make sure you take a percentage of what you made and give yourself a paycheck from that. So even if you don't have a payroll, you have to become your own payroll. And those wages that you receive for yourself, that's tax deductible. Yeah. Okay, and that's gonna save you some money.
We offer those services too, for payroll and for some entities that need to, we have a lot of business owners and they need a payroll system going. And,
yes,
we're able to help you with that too.
And so now, who does benefit?
Okay.
What entity does benefit? That's going to actually save you some more money too, as well, is S Corp. S Corporation is a payroll must. That is one of the perks of having an S Corporation, is because you get to write off that payroll, and it gives you a very good deduction.
What's that rule with the S Corp?
So, in order to become an S Corp, mm-hmm. you want to make at least $50,000 to $80,000. Okay. So if you are LLC, don't wait to be taxed because if you make under $50,000, if you're making over $50,000 to $80,000 and you're LLC, you need to change the way you're taxed. The reason why, because you're going to pay more in self-employment tax. So, but if you be taxed as an S corporation, right, that's going to save you so much money, and you can pass through that income to your personal return.
Hey, you may just get a refund.
You may get a refund. Yeah, hey, you may. Now, remember that K1 is important too. So each partner of a partnership should receive a K1 Form 1065 detailing their share of income, deductions, credits, tax preference items, and partnership for the tax year. Partners should report their allocated partnership items on their individual 1040 in the same way they reported on the partnership return. So those two types of returns. You have a partnership return, 1065, and then you also have your personal return that it's reported on. So remember that. Now, a partnership is most likely to include income considered to be self-employment income, which means the taxpayer pays self-employment taxes on the specified income. Okay, so remember that, guys. Now, royalties. Royalties are paid to the owner of a copyright or patent by other party for the right to use the work over a specified period of time. Examples of royalties from copyrights includes musical or artistic works. The amount of royalties received by the owner would generally be based on the number of units sold during the period of the third party has a right to use. Now, and another example of a royalties related to oil and gas or mineral properties is a lease to extract those natural resources from the taxpayer's property. Okay, now also insolvency. So a taxpayer becomes insolvent. Thank you.
Shameless plug, really quick. When I seen royalties, I thought about my book. You get royalties when you write a book, but go ahead.
Okay, so when a taxpayer becomes insolvent when their total tax liabilities exceed their total assets. Forgiven debt must be reported on the taxpayer's tax return. However, the forgiven debt may be excluded as income under the insolvency exclusion. A taxpayer can exclude forgiven debts. This is very important, guys, to the extent that the taxpayer is insolvent. To take advantage of the insolvency exclusion, the taxpayer must complete Form 982 and attach it along with the Forms 1099-C to the federal tax return. So we're trying to go over everything that you need to properly file your return. In order for you to reduce your liabilities, we want to make sure you don't miss out on no forms. So when we file your taxes, we ask you this in our interview. And that's very important, right?
And we actually had a client of ours that is a personal, very important person to me, who the IRS sent them a letter saying that this very thing about the sovereignty. And what happened was we got her, instead of her owing the money, they had to pay her the money that they were saying she owed, just because of how we were able to help her. So
yeah, and she was insolvent for that year, and she just had to prove it. Yes. So documentation does what, Essence? Exactly. So make sure you keep those documents. You know, that's the main goal.
And that's what we like to do. We like to help our clients win over their taxes.
Okay, Brett, very briefly, we're going to hit on a few things, and we're going to fast forward just a little bit for the sake of time. But rental income. So rental income is any compensation received for the use of occupation of real property. In addition to normal rent, many other things may be considered rent, such as advance rent, property for service instead of rent, security deposits kept, payment for concealing a lease, right? Mm-hmm. Expenses paid by a tenant, rental property used as home, fair rental value of portion of the building used as a home, part interest, lease with option to buy. So a lot of people come to us because we have a lot of property owners, and we also want to save them some money. Now, what is considered rental expenses? You guys want to probably write this down too. Advertising, charges for services, example given, utilities, other interest, maintenance, auto and travel expenses, points, repairs, depreciation, tax preparation on the Schedule E. You get it? Tax preparation. Commissions, legal fees, insurance, mortgage interest, taxes, management fees, rental payments for property, local benefit taxes, rental of equipment, vacant rental property, pre-rental expenses, and part interest, and uncollected rent. That's also considered rental expenses. So this is what you give to your tax preparer, along with when we ask for those expenses for your rental. Okay. We're gonna skip this question also for the sake of time. Now, reporting of rental property sales. When rental property or other assets are sold, the gain or loss must be reported on Form 4797, sale of business property. If the property sold includes land, both the land and the property must be reported on Form 4797, right? Now, the different sections forms, part 1 is used to report sales of the selection 1231 portion of a real estate transaction. Okay, so if you sold property, the capital gains of that must be reported on that tax return. If you don't, you're gonna get a letter. You may get a letter because they're gonna send that and say that you owe taxes on it, and that's the purpose. So remember, you wanna add all of the sales if you have sold your rental property, right? Now, last but not least, for all of our taxpayers out there, in the beginning of the year, they came out with what was called the new FinCEN reporting requirements for 2024. Oh, perfect. All right, that's awesome. And use Form 1. Okay, yes, absolutely. And so for all of you guys who have businesses, that's S Corps, that's C Corps, that's actual entities, make sure that you file on this website the FinCEN of the company reporting. This is very important, okay, guys, because this is something that came out for businesses. It is real. It is free for you to file it. If you guys do have trouble with it, you can always call us. Call in or go to our website, and one of our staff members can definitely assist you with this. But this is very important. Okay.
We try to type in our website, but you can scan this QR code that's right here. Our website is expedienttax.com. You can follow us on Instagram. Well, I put Stephen Keys, Essence Keys. And you can also message us on Facebook. We love to share our knowledge and get questions. Someone in the chat, I'm seeing that it says, I gave multiple years, 2020 through 2023 for him to file, which he didn't. He only chose to do 2022, and I haven't been able to get a hold of him since. I was confused. So this is what you can do. You can go visit our website, and you can make an appointment, and we do virtual and office option. And most people love the virtual option because you're able to upload your documents, but we can definitely file every year for you.
Yes. And so, so definitely give us a call with that. We'll definitely see if we can get those taxes filed for you. And definitely one of our CPAs would definitely be able to assist you.
I'm trying to see if anyone has questions. I'm trying to go back and just review to see if we missed anything. If you have questions, we're happy to answer. How can I get a copy? Because I'm
being audited and can't get in contact with his office. Okay. So what you would do is we would probably need you to pull your transcripts, right? So what you would do is for those tax years, you're going to go to the IRS's website, irs.gov/transcripts. You're going to pull the transcripts for those years. And we're gonna see if there's any forms on there that need to be filed. So the purpose of pulling those transcripts is so that we won't miss anything. Okay.
And then when you file with us, if for any reason, like let's say if a client didn't get a copy, we always are able to send out copies to our clients. So it's unfortunate that you had that experience with that preparer, but we are available year round. I try.
Oh, it's 773.
Okay.
773-413-8291. That is our number. Okay. And You're gonna go to we'll definitely assist you. Call, make an appointment, and we'll definitely get you going.
I'm gonna try to send, if you have any other questions, we still can do that. I'm just probably try to send a direct link so that if you want to book whatever service, you're able to do that right away. But if you have any other questions, we're still here, ready to assist in any way possible.
Well, Stephen and Essence, can you hear me?
Yes.
All right. Listen, that was an amazing, amazing presentation. Letitia said, "Thank you so much for this awesome information." Yes, I am. And listen, I got my business partner with me. But so I am.
Okay.
I'm so grateful for the knowledge that you all have. And I learned some things, and so that's why it's so important for entrepreneurs, small business owners to have great certified tax professionals, accountants working with them, especially in the beginning, because sometimes we're choosing the wrong business structures
Yes.
and then we don't know it. And so we're double taxed, we're paying too much taxes, and that's why we don't have a lot of net profits.
Yes.
But with this information, we can get our structures changed and
Yes.
we can save some money.
Yes.
And so if we had a live studio audience, I would say give a rousing applause. I know everyone is excited. Clearly Maddox is excited as well. Yeah.
Oh, so cute.
But we are well, listen, for those of you who don't know, once again, you just took part in our Dream Center Dream Builders podcast webinar series. What we wanted to do was bring you some informational webinars and workshops to help you to start or grow your business the right way, because there is a wrong way to grow your business. You can grow it too fast, exponentially, you scaling and you don't have the processes in place. So there's so many things to entrepreneurship, like having to do a webinar with your mini me on your shoulder. But
So
the
cute.
show must go on. And so, Stephen and Essence Keys, thank you again for this great information. Dream Builders, if you're looking for someone to assist you, you can definitely connect with Expedient Tax Services.
Yes,
And
you
it
got
is Stephen with an N. His wife just forgot the N on
it.
But you two are doing some amazing work, amazing work. Shout out to all of you that are tuned in tonight. In closing, Stephen and Essence, I want to give you the floor to take you. Well, it's two of you. I was going to say 60 seconds. So about 120 seconds. So about 2 minutes to kind of end with a motivational moment. Because, I realize that we can go to all of these classes and we can learn so much. And sometimes not only do we just need the information, we need a little motivation. So
Yeah.
I'm going to let you guys have the screen for 2 minutes and then I'll be right back.
All right, go ahead, sweetheart. Yes.
Wow, you picked me up.
Oh no, it's fine. So,
Okay.
well, yes. So basically, thank you everybody for tuning in with us. Remember, this webinar is to help the people. Spread the word. We gotta. It's all about the information for what we do for one another, and we have to learn to spread the love to our community. That's what's going to build us up spiritually, physically, mentally, financially. And at Expedient Tax Service, our website is www.expedienttax.com. And I would love for somebody, tell somebody else, because you don't know who you're helping out there. Okay. Yeah. And especially we got to work together. To all my business owners, to everybody that has a dream, I say go ahead and pursue it. Right now, there's nothing in this world right now in 2023 that you can't do. And everybody right now is in open arms. So whatever your genre is, whatever your passion is, we say go ahead and pursue it, but we also say keep those books in order.
Yes, because with us, you can win in anything you do. One thing about me is I started off as a singer. I have my degree in corporate communications. I'm currently International Mrs. Midwest, but because I was so focused on just being the artist, I didn't think about business and how
Thank you,
worked.
Mr. Barker.
And I feel like when you are pursuing any dream that you have, it's important to have that financial knowledge on what you're doing. And if you have faith and if you get with the right people that want to see you win, you can do anything. And so never allow what you see to limit you. You want to go beyond what you can see, because I don't want to start preaching, but whatever you speak out of your mouth will come to pass. So you want to speak great things. And if it's that business you've been wanting to start it. If it's a book you've been wanting to write it. I wrote my first book this year called You Got This, Mommy, Just Breathe. And it touched so many people. So you never know if the gift that you have inside of you that you've been bottling up so long and you've been like waiting for the perfect time. Let me tell you, there's no perfect time. There's only the time right now, because tomorrow is not promised. And just know that your legacy is within you. And so all you have to do is bring it forward, and it will definitely lead you to success. So connect with those right people, build partnerships. We're open to partnerships as well. And we just appreciate Marcel for bringing us on, because he's been like, he's been a gem to us. We literally told him, wherever you go, we go. We're going to just stick to you like glue.
Well,
listen,
I
love this.
I am so grateful to have you guys listen. Shout out Kathleen, said great information. This was some great information last week. And you know what? The message of the day, and you have to be able to shift quickly, right? And that's in business, and that's in life. And so last week we were supposed to do this webinar, but I believe God makes no mistakes. God's timing is perfect time, and this is right on time. So this Thursday, we're going to double up this week. We have Kiana Barber, the CEO of WDB Marketing, tuning in to talk all things marketing and branding. So you want to tune in, register, stay in tune. Once again, thank you, Stephen and Essence Keys. And that is my timer telling me we are over time.
Thanks for having us. Oh my gosh, yes. And we will reach out. Yes.
Listen, believers, we are out. We have, man, what a workshop. Make sure that you share that the Dream Center is continuously bringing resources and tools for entrepreneurs and aspiring entrepreneurs to start or grow their business. Until next time, we will see you on Thursday. Thank you.
When you're a small business owner, you need access to the tools and support you never knew you needed. At the Dream Center, we offer co-working space and support services that elevate the everyday entrepreneur. Centrally located in the rising Soul City corridor of Chicago, we're the ideal environment, offering monthly and quarterly networking for members. Bring your idea to fruition. Expand to new heights. Call now or visit thedreamcenter.co today.